Dalal Street snapped its 8-day winning streak, but the Sensex and the Nifty managed to end in the green for the 5th straight week, despite the fall that we saw on Friday. But what's the road ahead? Hello and welcome to Editors Roundtable. I'm Sonia Shenoy. With me today, we have my editors, Anuj Singhal, Prashant Nair, Ekta Batra. Folks, it was a great week. I mean, you can't deny that, right? Although Friday was a bit of a dampener, but nevertheless, 5-6 weeks, not just for us, but for the global markets as well.
Are we up for the week? I mean, because it became touch and go towards the end, right? March really, just about there.
I think the other key highlight for this week was that this is the last of the truncated weeks, right? So the long weekends, we won't get them anymore.
We have one more holiday in August.
We have a holiday
at the end of the month.
Yeah, but jokes aside, very sort of interesting bit of price action on Friday, Sonia. We spoke about it this morning as well, that, from the risk-reward point of view. But let's see next week, what do we have? But the price action on the Friday market was quite interesting.
And give and take everything, I mean, we're still 4%, 3% away from all-time highs, right? So that just goes to show that this is a buy on dips market. Whether people want to believe it or not, there's still a FOMO feeling. I know a lot of people are saying, oh, this is a stealth rally or whatever you want to call it. But give and take everything, we're still very close to all-time highs.
We are, but, if you ask a runner, the last bit is the toughest. Just when you can spot the finishing line, that's when things get
I take that point because, people have moved completely to one side now and opinions follow prices. Prices have been moving higher, so it's become a bull market. People are now calling it a bull market. It's a new bull market. Or for some, the old bull market never ended. This was just a correction. And it's possible, it's true. But I think Friday's close, we've ended below, I put this chart out last week, the trend line, which is from the all-time high of 18,604. Today, on Friday, today, we've ended just below it. I mean, about 50-60 points under it. Yeah. So I would say it's touch and go. It's possible that there is some more retracement in terms of prices, some more pullback. That kind of a thing.
But just on that point, this week we saw the first FII sell figure as well come through. But is that a point of concern? Because that's the first time since the 27th of July. Because of a large trade. So that momentum has to sustain for us to actually even sustain those levels. Yeah.
Okay, but on the market itself, overall, I mean, things were good. Then they kind of petered off a little bit. What are the big cues to watch?
Yeah, Sonia, the issue with this market is this is a market in which markets move in one go. There's no in between, it's either bull or the bear. This market just moves one way. In that sense, the Friday dip looked a bit sinister to me because it wasn't bought. And there was a very important call that we had from Lawrence Balanco, who's making this point that the market in India has triggered an exhaustion signal. He's using DMARC signal. DMARC signal is one of the most used technical signals. And the reason he's using it is that a similar exhaustion signal was seen previous 3 tops. If you see the last 3 times the markets topped out, starting from October 2021, the same signal was witnessed. What's that signal? That signal is the RSI, the 14-day RSI on daily charts. I think Prashant has been also talking about it. It's moved to 83, 84. That's some kind of toppish signal. Now, that's theoretical, of course. Let's see if, this actually translates into the market topping out. One day, of course, doesn't, one swallow doesn't make a summer. But that's something that you got to keep an eye on. The other interesting bit that I read over the last couple of days is that in the US, there has been some heavy institutional selling for 2 days, which the market has ignored. In fact, the hedge funds are now sitting on $107 billion of shorts in S&P 500. Now, do these shorts or do these hedge funds know something which we don't? Or are these shorts going to be trapped and the market is going to make another one-way move? I think it's going to be fascinating. The reason I say this is going to be fascinating is the price point at which we are right now, both for US markets and for us. If we turn from here, we will make a lower top. Last time, post the Ukraine war, the market topped out at 18,200. So if this time we're topping out at 18,000, then we would definitely make a lower top. So that's the risk at this point in time, but that's just because of one day's price action. We need to see more over the next week or so. If we start to see more declines and those declines not getting arrested, perhaps that theory will play out. But Prashant, some very interesting fund action, right?
I mean, it's extremely interesting, frenzied, right? The fund activities, what we're calling it. So let me just quickly tell you and go on to the big wall and tell you, what we've actually seen in terms of the sort of fund action, the deal making that we've seen at a very, very fast pace. So I counted the numbers. It adds up to $4 billion worth of deals that we've seen over the last 1 month. So this is actually not even full 30, 31 days, working days. It'll be less than that. So $4 billion, I mean, it's a large figure. So, maybe I've missed out many, but this has all the prominent large ones, right? Most of these are block trades where there is one entity which is selling and, I mean, maybe one on the other side or many entities buying. Look at Zomato. That was right at the beginning of August, 3,100 crores worth of block, which changed hands. Where is the Zomato share price from the time that the deal happened? The deal was struck at 50 rupees. If you take the current market price, Zomato share price is about 29% higher from that price. So not only did a very large block trade happen, the price has moved up since. You look at HDFC AMC, another block trade, 12.6% higher, the share price. It was a 2,300 crore block trade. AU Bank was a QIP worth 2,000 crores. Again, we are higher. Lodha, which is Macrotech, 1,000 crore block trade. 10% is the price change since then. Crompton Consumer was a pretty large block trade as well. That's 800 crores. Yes Bank is a preferential issue, but I've included that purposely because, I mean, for an entity like Yes Bank to raise 8,000 crores was maybe 2 months back, 3 months back unthinkable, right? But it's done that, and marquee investors have come in. Sona Comstar block trade of 4,900 crores. Max Healthcare, of course, the most recent, 9,200 crores, the larger and the more recent one. And CAMS, of course, that we saw on Friday, 459 odd crores or so. So just what are some of the takeaways, at least for me, from what all this data? Large blocks, QIPs, preferential issues are a frequent occurrence now. So in a way, the market, which was closed for these kind of transactions, is open once again. Average stock price gains of all those 9 deals that I mentioned from the strike price, the deal price to the CMP is about 11%, which is not bad. Just a few sort of specific names to give you a flavor of what's going on. GIC, Government of Singapore, has been a big buyer in deals. So, I could look at specific deals like Max Healthcare, Sona Comstar, etc., where they've come in heavily. Capital International, which cumulatively in India owns about $50 billion worth of stocks. They are big buyers. They bought clean 10% of Max Healthcare in one shot, right? So another, it's basically a vote of confidence, nothing else. Even, I mean, as I said, Yes Bank, right? Unthinkable 3 months back, but they've got commitment from a player like Carlyle, big number. And of course, other old investors like Fidelity, GQG Partners, etc. They've been buyers as well. This is a number I put out earlier this week on Twitter, but I think it's a relevant one which many are asking. FIIs, and by the way, all this deal activity has happened as FIIs have bought $3.5 billion, right? This is July till date, $3.5 billion. And all this activity, the market opens up for companies to raise money, block trades are happening. But that is a fraction. That's a fraction of what they sold between October 2021 and June 2029. It's a tantalizing thought. They sold 33, they've only bought back about 10, little over 10% of what they sold. I mean, what happens if they're buyers in greater force, greater numbers? I mean, where could the market be? And I think that's a question which many out there are asking. So that's basically from me today. But a lot of activity in the healthcare space, a lot of volatile movement in the healthcare space. Ekta, over to you.
Yes, absolutely, Prashant. It's always a big whole host of news pieces with pharmaceuticals, if it's the US, if it's India. And this entire week, there was a lot of news flow which came in from the US. In fact, it was particularly on a settlement of a drug which we have very commonly used in India, still use, as well as the US, which is basically ranitidine, or the gas-reducing or acid-reducing drug, known popularly as Zantac in many countries. Now, what exactly happened was that there was a settlement which took place in the US with generic pharma companies such as Sun Pharma, as well as Dr. Reddy's, as well as the likes of Teva in the US, etc., where they paid around $500,000 to a person who claimed that he got cancer because of the use of the generic version of Zantac in the US. Now, what this means is that the fear is that there could be many more such litigations going forward, which could impact generic companies. The liability that they could face could be much higher. They could face many more such type of litigations going forward, because cancer-causing substances such as NDMA, which was found in ranitidine, was also found in other drugs such as blood pressure drugs, which are called sartans, or metformin, which is basically used, extended release of metformin, which is basically used to treat diabetes. So the fear is that this could be a long way ahead. Stocks such as Sun Pharma were also in focus because of the Halol facility. The Mohali observations came out. Then the Halol plant was also continue to be classified as an OAI. If you talk about valuations, you know, there is a correction which has taken place, but some stocks such as Sun as well as the likes of Cipla continue to be resilient. But Sonia, you're watching the entire auto space. It's been, you know, absolutely spectacular in terms of the number of cars being launched in 2022.
Absolutely.
And the one that stood out was the little one from Maruti.
It was, but before that, you know, I mean, it's scary, right, to think that you go out there and you buy an OTC drug and then you get cancer because of that. I mean, aren't medicines supposed to cure your disease? And you, I mean, that's perhaps what's the latest.
You know, there's so many points of contention on that. But yes, it's extended use over a period of time. But GSK has come out clearly and said that, you know what, we've got scientific evidence that there's no correlation. So the debate is still out. But still, there are settlements which are taking place.
Okay, well, that's on the pharma space. As you said, auto stocks were in the fast lane this time around. So I'm just going to move over to the big wall to tell you, in case you missed out on the action this week, here's what took place. Well, auto stocks were clearly in the fast lane this week. Most auto stocks hit fresh 52-week highs. You hit a dart in the dark and you would have got it right in the auto space. I picked 4 stocks, M&M, Eicher Motors, TVS, Apollo, all at fresh 52-week highs. In fact, M&M is the biggest gainer this year now. It's up 50% in 2022. You have Eicher Motors that rallied 10% in August alone. TVS Motor has been a big gainer as well, up almost about 50% for the year. Now, it was a big week of launches and, you know, that really got things fired up. M&M unveiled 5 new electric SUVs in this week. The launch will be in December of 2024, though. M&M is also looking to launch XUV 400 in September, so that's the next big thing to look forward to. And there are reports that they will be acquiring General Motors' Talegaon plant in order to further their expansion plans. Maruti was not too far behind. It launched the Alto K10 in the hatchback segment, and its price is quite affordable, actually, if anyone's looking forward to that one. Sub 4 lakhs category, so Maruti is another one that I was tracking this week. Tire stocks were also in the fast lane. Of course, because of new launches, you will need more tires, so more business for them. But apart from that, rubber prices are at 19-month lows. Apollo Tyres hit a fresh 52-week high. And Nomura put out a very interesting note where they said that a 10% drop in natural rubber and crude derivatives can improve Apollo Tyres' margins by 170 basis points. The only problem is that the valuations for some of these stocks have become a bit steep now. If you look at the two-wheeler space, Bajaj and Hero are fine. They are in line with historic averages of 15 to 17%. The problem really is TVS Motor has now become quite expensive, 26 times FY24, and Eicher Motors as well after the run-up is now trading at almost 28 times. Let's move on to the passenger vehicle space. Maruti and M&M have also higher than their historic averages at about 20 to 25 times, while Ashok Leyland and Tata Motors in the commercial vehicle space are not too bad, about 12 to 20 times over there. But all in all, autos were in the fast lane this week, and most stocks hit fresh 52-week highs. Let's take a quick commercial break on that note. When we come back on Editor's Roundtable, we have a guest joining us to help us discuss all the big cues. Pramod Gubbi will be with us in a minute.
Welcome back. You're watching Editor's Roundtable. We have a guest joining us now. Pramod Gubbi is joining us. He's co-founder of Marcellus Investment Managers. Pramod, good evening. Thanks a lot for joining us. The key highlight for this market has been the sort of return of FI buying, right? But there's also this debate that, you know, what we have right now is hot money sort of replacing some of the more sort of strategic money. You know, we've seen so many block deals, for example. Your thoughts?
Well, like I said the last time also, I'm not the best person to answer what type of money is coming in. But I think in general, you can see a sense that people are getting more comfortable with the interest rate hikes, although yesterday's minutes suggested that we are not done with. I'm sure there is more to come here. But I think broadly people reckon that inflation is coming under control, and therefore maybe we don't see that much of a tightening as we had once envisaged. That seems to be sort of driving flows towards risk assets, including equities and emerging market equities. Within that, I reckon India is being seen in more positive light from whatever conversations we've had with offshore allocators. India is increasingly being seen in more positive light, partly given what's happening in China, and China is a big part of the emerging market index. And if people are concerned about what's happening in China, they are looking for alternatives. And I think in terms of the size of the economy, India clearly stacks up. And there are very few alternatives within the emerging markets that can offer this sort of capital deployment opportunities. And from our own perspective, I think India has done well in terms of keeping the economic conditions in good shape despite the headwinds that we've had to face. The banking system is in good order. We've seen credit growth coming back after a long time. Earnings season hasn't been that bad. And more importantly, we've dealt with inflation better than a lot of other countries, better than ourselves in the past. So I think a lot of boxes are being ticked for India just when some of our emerging market peers sort of not doing great for themselves.
Pramod, hi. Do you think banking and financial services as a sector, what will it take for it to start to really fire? Some of these block deals data, etc., that I was presenting earlier, very large funds like Capital, etc., although they've only bought back a small portion of what they sold in the preceding 9 months, is the preference banking financial services? One doubts it, looking at the kind of transactions which has happened, the price performance for that matter. Any thoughts there?
Yeah, I mean, we've been quite positive on the financial services sector. So we don't know what other investors are thinking, why they're buying or selling. But we reckon there are a couple of tailwinds, structural tailwinds, I would say, for the financial service sector in general. One is the financialization of household savings in the country. Despite global interest rates going up, India's mortgage rates are pretty sensible, right? I mean, I can't think of a time when U.S. mortgage rates were around 5.5%. India is around 7%. There's hardly any difference there. That clearly demonstrates a structural reduction in cost of capital in India, and a lot of that has to do with the financialization of household savings. A country which historically has been sort of enthralled by real estate and gold as asset classes has seen almost a decade of pretty healthy flows into bank deposits, mutual funds, small little PMSs like ourselves, insurance penetration going up. So we've finally broken out of that physical asset mold where savings is flowing into financial assets. That's a big structural tailwind which is likely to last for multiple decades. And within financial services, we reckon there is a significant market share gain story that's happening, given the predominant presence of public sector in the past. I think some of the better run private sector banks, NBFCs, private sector insurers, both life and general, have significant opportunities to gain market share. So a double tailwind, I reckon, puts financial services on a structural growth path for the next couple of decades at least. That's the sort of range that we're looking at.
Sure.
The shorter term could be anybody's guess.
Okay, Pramod, I just wanted to take that point forward with regards to FIIs probably looking at investments from a more strategic long-term standpoint and tie it in with the fact that there was this big deal which took place in the hospital space where Max, KKR exited Max Healthcare, but there was enough interest which we saw in that. But separately, something like Apollo Hospitals has lost quite a bit. It was the top loser on the Nifty this week, and they're not getting that funding that they're seeking, at least as of now, for their digital arm. Would that space interest you from a long-term standpoint at all, the hospitals/healthcare sector?
Not really. I mean, historically, it hasn't come up in our screeners. One of the key parameters we look for in our screeners is consistently high return on capital. That's been missing from this sector, at least, every now and then you do see high returns on capital, but not consistently enough for us to look at this sector. Partly because I reckon, given these are capital intensive, asset heavy, some of them are moving to asset light models, but by and large, real estate is a big input component into hospitals, and that's perhaps been a drag on return on capital. But as the sector matures, I reckon more asset light models will emerge. So structurally, the demand story is fairly intact. Indians are becoming more affluent, and they can afford better healthcare services, and the country needs healthcare services. So to that extent, the demand side story is all right, but we'd like to see better returns on capital in the sector.
Okay. Well, Pramod, we've run out of time, but one very quick question before we end the show. We were just talking about all these new launches that have come out from the auto sector. Is this a space, I mean, it looks very exciting with stocks at record highs and new launches, but is this a space that's become a bit of an overcrowded trade now, or do you think there's still more to go?
I'm not sure about the overcrowded nature, but I think autos do pose a structural long-term opportunity, given, like I said, if India were to grow from $2,000 per capita GDP, you do hit that sort of inflection point where there will be significant savings coming through, people moving from spending on staples to discretionary. Auto is perhaps one of the more first items to take on the discretionary front. Penetration, primarily in four-wheelers, to some extent in two-wheelers, is still a long way to go. To that extent, the structural growth opportunity is intact. But I think there have been a few supply-side challenges around semiconductor availability and so on, but those are more shorter-term challenges. In my view, for longer-term investors, autos and auto ancillaries have always provided plenty of money-making opportunities across the globe, across cycles.
Pramod, we'll leave it there today. Thanks a lot for joining us. Before we wrap up, we didn't discuss the stock of the week, PVR. 15% down.
The fall
Are you guys not watching any movies? Sonia,
I
Ekta?
don't like
I'm watching
to go
it
back
at
to the
home.
theatres. I'm very happy watching it in my home and at my own comfort. I feel that I don't have any patience levels left anymore after COVID, I think,
Yeah, but the content has really been very disappointing.
We were discussing this earlier in the morning.
This is the only reason.
The only movie that I've
week.
watched is Top Gun in the theatre. After
Yes,
that, I have
yes,
no feeling, no
I've seen
desire
Top
to
Gun,
go
I've
to
seen
a
RRR, I've seen KGF as well. I've seen Bulbulaiya too. But the last few movies, I believe, it's just been too bad. Just rehash of the previous film.
And trends are also changing, right?
Absolutely.
People don't really want to go to the theatre anymore. Okay, well, anyone buying the new car, the K10?
I was just going to say that Pramod mentioned you mentioned overcrowded trade, but it's overcrowded cars on the
Too many
road.
cars
You
on
can't
the road.
differentiate one from the other for me.
Yeah, but the new one's not bad, I mean, it's just
Which one?
4 lakhs.
The K10.
The new Alto K10. You
K10.
can zip around with that
Absolutely,
small car.
and parking won't be a problem.
And parking won't be a problem. All right, guys, have a great weekend. Thanks a lot for tuning in to Editors Roundtable. We'll be back again Monday morning.